Hey everybody, Smart Silver Stacker here. Today is Wednesday, October 5th, 2022, and we are seeing a major sell-off in assets across the board today. All of the major stock indexes are down. Even crude oil is in the red today, which is very surprising considering that OPEC just announced some major production cuts. So you know that there's some negative sentiment out there when crude oil is selling off, even in the face of news like that. Precious metals also down today. Silver's down about 5%, although I've got the 1-month chart for silver pulled up here, and you can see that we're still holding on to a considerable portion of the gains that we had over the past two trading sessions. You know, on Monday, silver was up just about 10% in one trading session, so still green for the week in silver. And then gold is also down today, less than 1%, so a pretty fractional loss there. Gold also holding on to a significant portion of the gains from earlier this week. Now, despite the fact that the paper price, the spot price of gold and silver are falling today, one thing that has been moving up recently is the price of actual physical gold and silver bullion. And that is reflected in the rising premiums that we are seeing on those products. And to show you what I'm talking about, I've got the Gold Eagle page here at SD Bullion pulled up. And you can see that if you want to buy one Gold Eagle today, at SD Bullion, you're going to be paying $1,909, an almost $200 premium over the spot price. And that is very high compared to the historic premiums on these gold coins. And one thing that you'll notice here is despite the fact that premiums are rising and they're gotten to a fairly high level, a lot of these listings are sold out. So what does that tell you? You know, I think it tells us that high premiums on physical bullion, it's not the result of greedy dealers or, you know, some extractive process of just selling metals for far more than they're worth. It's just the fact that supply and demand are pushing the prices up, because look at this listing here. This is for a 1-ounce American Gold Eagle coin random year for $1,921. That is more than $200 over the spot price. And yet, that listing is sold out. So, you know, if any dealer were to lower their premium and try to sell Gold Eagles closer to the spot price, for example, they would just sell out immediately and someone would arbitrage the difference, because clearly these coins are selling at these elevated prices. And, you know, what does that tell you? Why would investors pay $200 over the spot price for an American Gold Eagle coin when they could just go, I don't know, buy a futures contract, or they could buy some shares in the GLD ETF? And I think it's because investors realize the difference between paper gold and real physical gold that you can hold in your hand. Because remember, you know, I've said this a lot, but if you're new to stacking, you might not know how the spot price is derived. The spot price is a representation of the futures market. So it's not real physical gold that you're buying when you pay the spot price. You are buying a paper derivative of gold or silver, regardless of which metal you're talking about. It's the same situation. You know, these high premiums that we're seeing, that's kind of the predictable result, I think, when you have a gold market, a paper gold market, or a paper silver market that is suppressed artificially through manipulation. You would expect to see the physical price disconnect, because it's a lot harder to manipulate the price of physical metal, because you can't just create physical metal out of thin air the way you can, say, a paper derivative futures contract and sell it onto the market to drive the price down. You got to actually go mine the gold out of the ground and then mint it into a coin or bar if you want to manipulate the price of physical. So that's why I think we are seeing these higher premiums. And you know, it's not every single bullion product. You can go look at, say, 1-ounce generic gold products, and they're selling a bit closer to spot. But still, if you want to buy one of these generic 1-ounce gold bars, still $1,794. That's still a pretty big premium over spot compared to what we are used to seeing for generic gold products. And I have a question for you. I'd like to know what all of you stackers out there think about the difference in premiums between, say, like a 1-ounce Gold Eagle and a generic 1-ounce bar. What do you think is the better deal? Because after all, an ounce of gold is an ounce of gold. So do you think it's worth it to buy an American Gold Eagle and pay an extra $100 for your coin? Or are you content to buy something more generic like one of these bars? Leave me a comment down below, because I always like to know what you have to say. But clearly, someone is buying these Gold Eagles for this elevated premium, and that's why so many of them are out of stock. And then one thing you'll notice here, if you want to see how many of these are actually available at SD Bullion, I'm just going to try to add a lot to my cart. I'll try and add, 9,000 of them to my cart. Oh, and then look, if I add them to my cart, I have to confirm that I understand that these are not going to ship until November 17th. So these are on pre-sale, basically. I'll go ahead and accept that and hit continue here. But there aren't 9,000 available. There's only 429 of these coins available, and that's for pre-sale. So the pre-sale is getting close to selling out. All it takes is one very wealthy individual to come and pick up 429 coins. That's not that much money when you consider how much fiat is floating around out there. And then also, we can take a look at some other products like the gold buffalo. These are also sold out in very short supply. If I try to add a bunch of those to my cart, what do I get? Oh, those aren't shipping until October 19th, so that's a little better, but still a pretty lengthy time to wait for a product on pre-sale. And then there's only 193 of those available. So clearly, bullion supplies are getting pretty tight. You can see most of these listings are completely sold out. And it's not just limited to SD Bullion. This is the situation across dealers. And let's talk about what's going on. Why is there all this demand for bullion and physical metal specifically? Well, one thing that we did see today was the yield on the 10-year Treasury is resuming its move up. And over the past 2 days, we saw stocks taking off, we saw precious metals taking off, and we saw the yield on the 10-year bond come down significantly. And there's been a lot of speculation as to what was going on with that. We can look at the 5-day chart here, and you can see this is a pretty significant move over those past 2 trading sessions. Even though we're spiking back up now, there's a lot of speculation that maybe the Fed had come into the market and was doing like a stealth pivot and buying bonds. And that might have been the case. I mean, I don't know any way to prove that definitively, except for the fact that it's awfully strange that bond yields were falling so far. I mean, who was buying the debt? Someone had to be buying the debt to drive that down. So maybe the Fed was engaged in some kind of a stealth pivot. But, if they were, that's done now, it looks like, because we're seeing yields move back up. And, it's very strange also, I'd like to point out, to see so much volatility in the yield on the 10-year bond. I mean, that shows you that something is up in the debt market. There's a lack of liquidity there, because typically bond yields are a lot more stable than this. So I think that's also something that is concerning investors and maybe wanting them to get into the safety of physical metal, because they can understand that something is up here with global debt markets. And so uncertainty about the global economy, I think, is one of the factors that is driving up these premiums here. And investors here in the US, I think, are right to be concerned about the debt market and the illiquidity there, because even if the Fed didn't have some kind of a stealth pivot over the past few days, we are likely to see a pivot one way or the other soon if we continue to see these bond yields rise. There's so much debt in the system that as these interest rates continue to move up, the debt service becomes untenable and something's going to break. But another story that we got, this was from a couple weeks ago, September 22nd. This was originally posted by Bloomberg, and that was that Chinese gold premiums have been moving up, and that there was a $43 premium in Shanghai over the London spot price. And so we've been seeing the premium on gold on certain international markets moving higher, and that's kind of siphoning gold away to those areas, causing premiums in other places to rise as well. And this is a headline that we got yesterday from Reuters. Banks divert gold supply from India to China and Turkey. And China and Turkey are two of those markets where we are seeing the premiums move up. Now, in Turkey, it's because they're having runaway inflation, and investors there are looking for an inflation hedge. And, just as an aside, if you want to see what the price of gold and silver do when a country experiences significant inflation, this is the chart for gold and silver for 5 years priced in Turkish lira. And so you can see that anybody who has saved value in gold and silver rather than in the regional currency, in the Turkish lira, has done quite well. They've been able to protect their purchasing power a lot better than those who were in paper. But in the case of China, they're not experiencing drastic inflation over there. The yuan is losing some purchasing power against the dollar, but I think it's likely that the big driver in China driving up these premiums is that the government itself may be accumulating metal. We got this headline from Kitco back at the end of August that in July, China's gold imports from Russia had surged 750%, and that is as Western nations have banned the import of Russian gold, so the Chinese are glad to accumulate large quantities of Russian gold on the cheap. But that hasn't been enough to sate the demand there, and so premiums are still continuing to rise. And this probably has something to do with the advent of some kind of a gold-backed or commodity-linked currency by the BRICS nations or by China. I haven't seen anything definitive about any of this, but there's been lots of speculation that China may be on the verge of unleashing a gold-backed central bank digital currency. Vladimir Putin has talked about creating the Moscow World Standard, an alternative precious metals exchange, an alternative to the London bullion market. And so likely there is something in the works over there as part of the whole campaign of de-dollarization by countries like China and Russia. And I suspect that that is why they are accumulating so many precious metals. And as a result, the premiums and availability of gold around the world are declining. If we go back to this story from Reuters, in India, they're a big consumer of precious metals over there. They have a long cultural history of storing value in precious metals. If you've ever been to an Indian wedding, there's a lot of gifts of precious metals that are given, and also at other holidays. They're coming up to their festival season where a lot of precious metals are purchased and given as gifts. They are running low on supply. One Mumbai vault official was quoted by Reuters as saying that ideally a few tons of gold should be there in the vaults during this time of year, but now we only have a few kilos. And right now the vaults only contain about 10% of the gold that they did the same time 1 year ago. And so this is a phenomenon around the world. We are starting to see the supply of physical metal dry up. And as a result, even though we might see a tick down in the paper price, I suspect that the price of physical precious metals will remain stable or even increase as premiums will continue to rise to compensate for that fall in the spot price. And I've talked mostly about gold in this video so far, but the situation is also in silver. You can see here I've got the 90% junk silver page pulled up on SD Bullion, and it looks like they do have some junk silver available at the moment, although it's going for almost $23 per $1 face. You can get a $100 face value bag for $2,285, and that comes out to over $32 per troy ounce of silver at a time when the spot price is around 20 bucks. So even though junk silver might be available in small quantities from certain dealers, the premium is skyrocketing, and there's not that much available. Like if I try to add, let's say, a couple hundred of these bags to my cart, I can't. There's only 12 of those bags available, and so junk silver is like the canary in the coal mine for silver. If it starts to run out of stock, expect other products to be out of stock shortly as well. And, I haven't pulled the trigger on a bullion purchase in a little while here, and I'm still kind of waiting for more of a pullback, but I don't know if that's even worthwhile because we are seeing the premiums, like I said, rise to compensate for any fall that we see in the paper price. One thing that I thought was pretty interesting is SD Bullion has these 40% US silver Kennedy half dollars on sale right now. And this is a sale, mind you, and it's $2.29 over the spot price. Now, that's still a pretty good deal considering what the premiums are like on just about every other bullion product at the moment. But to see a premium on 40% silver Kennedy half dollars, I mean, in the past, these would almost certainly sell for spot or sometimes even a discount to spot, as in some ways the lower purity coins are not as desirable as, say, something like a pure silver coin or round or even 90% silver. But hey, silver is silver, and if you can get it close to or at spot, I guess that's a pretty good deal. I mean, I was thinking about possibly picking up a bag of these, even though I do have a couple of 40% halves in my stack at the moment. I've never really been a big fan of the low purity coins, but I suppose something like this might be nice to just have 200 of a very uniform, similar coin in a bag. I mean, the bag is cool too, I guess, getting a bag of coins. But something like that might be nice to have as maybe a potential barter item for the future. I don't gear all of my stack towards like SHTF bartering or anything like that. But having one bag like this on hand might be a good idea. So I'm considering grabbing one of these. I don't know. I might wait to see if the spot price falls even further. But again, this is, while supplies last too. So I might miss my opportunity to get these. I don't know. Let me know what you think about 40% US silver Kennedy half dollars in the comments down below. I think it's interesting that we're seeing even those fetch a premium to the spot price today. That's really indicative of how tight the physical supply really is, I think. And anyway, I do just want to say a big thank you to all of you for watching. If you have some personal stories from your area regarding your local coin shops and the availability of metal there, I would also love to hear about that. So, I know I'm asking you for a lot of comments in today's video, but I really do like to get feedback from all of the viewers, and it's kind of a fun way to communicate with you. I try to respond to as many of the comments as I can too. So, always let me know what you think in the comments down below. Thanks again for watching. I will catch you next time. Stay safe and happy stacking. Smart Silver Stacker, out.